It's so crazy. I mean, Bitcoin has outperformed gold over the last year, and we're all freaking out, right? I know it's underperformed year to date, but you just zoom out a little bit. But I agree, people freak out. That's your opportunity. Bitcoin's done pretty well since ETF launched, up about 160, 170%. But we haven't yet reached that exhaustion. So when will we? I don't know, but I do know it's coming, and that makes me want to buy every dip and hold forever. That's bullish. When I started at Bitwise, if Bitcoin matched gold, it was getting to like 700,000. Now, if Bitcoin matches gold, it's getting to like 1.4 million, right? That's positive as well. So I see only good stories out of this gold bull run. I think we should all be happy about it and cheer the boomers and wait our turn.
Bitwise's CIO, Matt Hougan, claims that Bitcoin is currently going through the same early accumulation phase as gold went through prior to its historic rise. Although the price has increased by over 160% since the introduction of spot Bitcoin ETFs, Hougan claims that genuine seller exhaustion has not yet occurred. ETFs are currently the new marginal purchasers, but traders and short-term speculators continue to supply them. In the case of gold, the market reached that vertical breakout point only after 4 full years of consistent central bank stockpiling. ETF purchases for Bitcoin are only 2 years old. The greatest upside is yet ahead if the historical trend continues. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Bitcoin's done pretty well since ETF launched, up about 160, 170%. But we haven't yet reached that exhaustion. So when will we? I don't know, but I do know it's coming, and that makes me want to buy every dip and hold forever. It's worth noting the other obvious thing is gold is telling you that the store value market is bigger. If you continue to think Bitcoin will get a larger share of that market, that's bullish. When I started at Bitwise, if Bitcoin matched gold, it was getting to like 700,000. Now, if Bitcoin matches gold, it's getting to like 1.4 million, right? That's positive as well. So I see only good stories out of this gold bull run. I think we should all be happy about it and cheer the boomers and wait our turn. So if you look at the data, the buying went skyrocketed in 2022 when the US seized Russia's assets and central banks were like, we have to buy something else. And then it stayed flat from 2022 to 2023 to 2024 to 2025. But no one talking about the fact that central banks are driving the price up says that it's been happening for 4 years, and we've only gone rocket ship in the last 4 months. And then it clicked for me that the thing I should actually point out is that's what's happening in Bitcoin. Because the other thing people are worried about is ETFs have been buying 2, 3, 4x the net new supply of Bitcoin. Why hasn't the price gone to the moon? And the answer is it's just doing the same thing, which is when you have these big new buyers, they have to buy the asset from every short-term seller. And for gold, that took 4 years. For Bitcoin with ETFs, we're in year 2. And what that tells me is that Bitcoin is going to follow gold to Valhalla. It's just a matter of time. As long as we have ETF investors continuing to allocate, they will wear down the sellers eventually. And then there'll be headlines like, what's driving the price of Bitcoin to 500K? And the answer will be ETF purchases. But it will actually be a 4-year story, not what's happening right then. I think there's a chance it goes lower. I think there's a chance it wicks below 100K. I don't think that's impossible. You see Standard Chartered put out a note a day ago saying below 100K is inevitable. But I think the long-term thesis is still intact. I think crypto is not driving the bus. And I think that's why sort of crypto natives are so depressed, because they're depressed. There's been no real alt season. It's been sort of a disappointing cycle. They're used to the 4-year turning over right about now. But I think what they miss is that TradFi is driving the bus here. TradFi is the marginal buyer of the large cap crypto assets. And I think they're going to paint their portfolios into the end of the year to show that they have allocations to gold, to show that they have allocations to Bitcoin. And so we could well dip, but I do suspect we set a new all-time high before the end of the year. It's so crazy. I mean, Bitcoin has outperformed gold over the last year, and we're all freaking out, right? I know it's underperformed year to date, but you just zoom out a little bit. But I agree, people freak out. That's your opportunity. Bitcoin is slowly marching up the institutional stack. If we were here 5 years ago, you'd be asking me like, will family offices buy Bitcoin? Now they're all buying Bitcoin, right? And there are few endowments, and maybe there's one or two sovereign wealth funds, and then traditional central banks are zero. But we've been marching up this institutional stack for the last 10 years. I see no reason why we won't get all the way to the top, which is central banks buying it. I think it'll happen. It's just a matter of time for me. I mean, so what we look at here is the most basic drivers of Bitcoin's price, which is you have the new supply issued every year from the blockchain. It's 164,000 Bitcoin per year. And you can see it from the time ETF launched to the time we wrap this report on the right. And then you have the number of Bitcoin being purchased by public companies and spot ETFs who've been the marginal buyers of Bitcoin. This is why I said that this is not a crypto native driven market right now, that other entities are involved. And as CIO, I can tell you the complex math says that the numbers on the left are bigger than the numbers on the right. And that's why the price of Bitcoin went up. And the point I was making in the memo is this will persist. ETF purchases are going to scale over time. Every ETF in history scales over time. So we're going to have this persistent supply-demand imbalance in Bitcoin. That means that existing holders have to sell to make those two columns the same. And they'll only do that if the price goes up. And eventually those sellers will be unwilling to, and I think the price will skyrocket. Another way to conceptualize what's going to happen, if you go back to that last chart, that in every other asset, the columns on the right are bigger than the ones on the left. So in stocks, that's like, 60, 40, 75, 25. In bonds, it's like 90, 10, right? So eventually those things on the right have to take over from the things on the left. And I think the price will go up substantially as they do that.
Hougan also delves into Polymarket, the rapidly growing blockchain-based prediction marketplace. He claims that most people are still unaware of the potential scope of this. Hougan thinks it might someday grow 1,000 times larger, changing how we foresee events, trade information, and even organize financial markets. They think it might increase fivefold. Infrastructure tokens like Chainlink, which provide the real-time data these platforms depend on, stand to gain the most if Polymarket and like systems grow, as he anticipates. He believes that demand for this type of reliable data might increase dramatically. Additionally, he cautions investors from becoming engrossed in conspiracy theories regarding market manipulation. According to Hougan, the majority of Bitcoin's abrupt price fluctuations can be attributed to standard market mechanisms, such as institutional rebalancing, weekend liquidity, and options hedging, rather than covert groups secretly influencing the price. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Yeah, I think that's right. For what it's worth, Polymarket is not optimistic. It thinks we're going to be shut down until at least like mid-November. If I'm looking at the right Polymarket, they're probably multiple, but the one I'm looking at puts a 50% plus odds on after November 12th, which is a while. It's crazy. It's such a commentary on what's going on now. My view of the Clarity Act is that the market has priced in it not happening. Mm-mm. And the reason for that is that you have the government shutdown and you have the Democrats pushing against the Republican version and a big conflict there. And I suspect there's a chance it won't happen. But I think if it does happen, it's a major positive catalyst. So I think it's important to think about where the market is versus the probability. If it truly fails, there's probably a little bit of downside. But if it does happen, I think it's a huge catalyst, particularly for ETH, Solana, on down, more so than Bitcoin. But generally speaking, it's one of the things that could drive us to new all-time highs.
Yeah, I would just second that. I think that we will set a new all-time high before the end of the year. November seems like a prime candidate for that. I think last time that we recorded, it was Friday of the flash crash, October 10th, and we recorded in the morning. So we had the initial statements, but we recorded hours before the chaos that ensued. And I think had that not happened, we would already be at new all-time highs. I think that was, of course, a minor setback, but that flushed a lot of leverage out of the system. Most institutional investors have no idea what even happened that Friday because they were more concerned with the statements that were being made and how markets were going to move and how futures opened over the weekend and what happened on Monday. So I think that ultimately that just reset the market and will allow us to push higher as more flows come in. And I also think that you have these uncertainty shocks from things that are tweeted out by Trump, and then they end up not being as big of a factor. And I think without those tweets, we would be at all-time highs. I think as we get desensitized to these types of events over and over again, and the recovery becomes quicker and quicker, that we're going to continue to push higher. And those forces that Matt mentioned, which is professional investors and institutions, are going to ultimately push us higher, and we're going to churn through all of that seller exhaustion that we ultimately will see.
Yeah, I would add there's been two things to do with the Trump administration that consistently have worked. And the first is to fade his tweets, right? Because it doesn't end up being as bad as the initial tweet happens. That's what happened a few Fridays ago. And the second is to count on them delivering on their core promises on crypto. They've actually done that pretty consistently. And so I suspect that 19% bid on Polymarket is a good bid to hit. Like, that's my guess. My guess is that will go up by the end of the year. I could be wrong, but I think my personal read of the probability there is that it's higher than 1 out of 5. I was just going to add on the retail stuff. I think they got double crushed. They got crushed by FTX, and they got crushed by the meme coin collapse. And maybe they just folded it in after Milano coin jumped.
And NFTs. Don't forget NFTs. NFTs are a big one.
And NFTs. I mean, that's 3 strikes. You can only get wrecked so many times before you fold up your tent. I think the retail that's been here is TradFi retail, right? The retail that's been here has been in ETFs. The retail that's been here has been in MicroStrategy and other DATs. I think it's been a different retail. I do think that retail demand is robust and continuing, but I think crypto native retail just got, as you said, or as we just covered, triple wrecked by FTX, meme coins, and NFTs, and maybe just isn't that robust in this cycle. But that doesn't mean retail's not here. It's just a different retail.
In the final part of the discussion, Matt Hougan lays out a simple but powerful message. Markets are driven by real forces, not by mystery or conspiracy, and the crypto landscape is shifting in ways most people still vastly underestimate. He starts out by discussing the blockchain prediction site Polymarket. The probabilities there indicate that some political or regulatory events, such as the Clarity Act, may be postponed until well into November, according to Hougan. Additionally, he explains why the market has already factored in the possibility that the act won't pass. Political impasse, partisan conflict, and the possibility of a government shutdown are all present. Hougan emphasizes that the act would be a significant bullish trigger, particularly for Ethereum, Solana, and the rest of the cryptocurrency market if it were to pass. He also reminds us that he still believes Bitcoin will reach new all-time highs before the year is out, despite recent volatility, because the flash crash earlier in October cleared the way for a greater upward advance by flushing out leveraged traders and resetting positions. He thinks it was really beneficial for the market. He goes so far as to say that the majority of institutional investors were so preoccupied with macro signals, futures markets, and fundamentals that they hardly noticed the upheaval. He adds that today's retail cryptocurrency investors are quite different. The old retail, which included FTX users, NFT flippers, and meme coin traders, was completely destroyed. However, investing through ETFs, platforms like MicroStrategy, and more conventional instruments has given rise to a new type of retail. To put it another way, retail changed rather than vanished. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.